Well, good day, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday evening, and we are now sitting here at just about 5:40 p.m. Central Time on the 22nd of August, 2022. As you know, this coming Friday morning at 9 o'clock, the big meeting takes place. In other words, we're going to hear from Fed Chair Powell. And he's got to be delivering a meeting, in my mind, and Larry Summers is already calling him out on this. Forceful, he's going after inflation, he's not going to let up. Mr. Summers doesn't want the Fed chair to sound, well, we'll do it this way, we're not going to tip it over, blah, blah, blah. I understand what Mr. Summers is saying. He's saying, get it over, get it done, let's get this behind us. And what you're really dealing with in these markets is a Fed, the banker of bankers, that's what we are, the head of the world banks, if you really want to consider it that way. How aggressive are we going to be? We know that this inflation could be a slippery slope. We've watched grain prices slip recently, although they are catching back up some bids as we're getting closer to the harvest and the crop tours, and they're going on now. We're seeing interest rates climbing back 2 and 10s, both now back over the 3% area. We're seeing energy prices trying to figure out what to do next, as we don't know if the U.S. is going to allow Iranian oil back on the marketplace or not. It's very complicated. You have to get into the nuclear treaty with them. Would you trust these people? Not in your wildest dream. They're liars. The Iranian government is a series of liars. They do what they want. They tell you one thing, then they turn the cameras off. You can't see it. They don't answer questions about why there's radioactive isotopes in an area that there shouldn't be. You have no idea what they're doing except for one thing. They have a goal to get a nuclear weapon because they're, if you will, their icon. President Putin has his finger by a nuclear weapon, and he's taken on all of NATO, and he's held him back. They're petrified to get into a war with him because you don't know if he'll push the button. Well, Iran wants to be in that in the Middle East and other parts of the world. They already support terrorists. So do you want to let them in? Okay. I'm for the Iranian people. I'm not for the Iranian government. Let me make that ultra clear to you. I think it's like in America. Our government's one thing. Our people are a very different thing. I think you'd agree with that statement. So, even a broken clock gets right twice a day. I have been telling you that I thought this market, and I said I'm going to make my statement. I did it a week and a half, 2 weeks ago, no longer than that. And last week I said it over and over. I think the combination of the 200-day average of closes on the daily chart with the upper Bollinger Band would be the zone the market peaked out in. It's what we're getting. Now, one break doesn't mean that this market's just coming apart, but it's a sizable break that we've gotten in these markets. You're also watching a number of the markets really having a hard time. I feel great on my call for AMC. I have warned everybody. I owned a movie theater. I warned them. These are not money-making businesses. How they were able to sucker people in a year and a half ago at $30-some-odd and do some funding of debt, they did a great job. I wonder if people ever be paid back on that debt. I have my doubts. But as we take a look at where we're at, you had a big break Friday, you have another break today, so you can get a Tuesday reversal in the market. That wouldn't surprise me at all. So let's take a look at some of these charts. On the S&P, it's been a phenomenal rally. You came from that June low dramatically to higher prices, and now we're suddenly getting a correction, all right? Now, has the market done any real work on the chart to be concerned about that's bearish? I think it has. You have a pattern of lower highs, lower lows. That is bearish. The market got up to the 200-day average, failed with it right there, fell back with today's action to the 18-day average, which gives you resistance above the market at the 18-day average. But you have some pretty good support still at the 100-day average right here at 40.87. It's not a clean slide to the downside, and support's going to come in between that 40.87 level to 40.54. So you're starting to find an area where there might be good support in the market. Now, that's not to say you didn't come down hard from this level up here. It's 150 points. You have come down nice and hard, but that doesn't mean you've broken the back of this market just yet. So correction time, it can come out of nowhere for any reason whatsoever. A lot of liquidation going on. I don't understand why people weren't coming out up there in front of this FOMC this week, but hey, what do I know? Nor did I understand the buying that went straight through there, okay? I didn't see it. And I'll give you another one that I don't see. I don't see how earnings are going to be stellar for this quarter when they come out right at the beginning of the fourth quarter. I'm just not seeing it. Too many slowdowns that I'm seeing. As we continue to see how the chart's doing here, you can see the Bollinger Band tying in with that number and the momentum. So we have momentum down in the slow stochastics. The bias is down since you're under the 18-day average, and the trend is down. So for the first time in a very long time, since back here, folks, early July, the market's under the 18-day average of closes. When we get to the Nasdaq, here's my little Ivy. When we get to the Nasdaq, the market's slipping down. Look for support, why not, at the 100-day average in the lower Bollinger Band. You're already in oversold territory. This market did not hit either the Bollinger Band or the 200-day average. Okay. You certainly did it here in the Dow. You hit both numbers and you've fallen back. The trend down, the bias down. The market's, I think, going to have a very hard time getting over that high. Very hard time. It could be a serious trade top that's in place in the market. And in the Russell, you did the same identical thing. So, as I said, even a broken clock, and I realize you might think I'm broken because I wasn't playing this run. I also wanted to say something in my defense that's very important to me. I wasn't telling clients to go short in this, any of this whatsoever. I just didn't see a buying opportunity. So in these videos, you weren't hearing me say buy, buy, buy. I wasn't saying that. Slow stochastic buys, absolutely, in my subscriber videos, but not in these. I admit that. This video is free. You don't get all my work. Okay, it's very important. In the VIX. So I stuck my neck out right here, and I told you I thought the pros, and this is what I thought they would do, they were going to write puts right here with the idea of getting back to the 18-day average, which they did. Now you're up to the Bollinger Band and into a lot of resistance. So down here, now the market is repricing risk, but you know, you can get back to the 18.5, 19 level. I don't know what to do with it right there. We have the bias is what? The momentum's up, the bias is up, the trend is up, and you're starting to encounter resistance and you're over the upper Bollinger Band. That's why I'm saying you get corrections through here right in front of the Jackson Hole meeting. 30-year bond, well, full play on, back to higher interest rates. This idea of lower rates as the Fed's going to get aggressive in Jackson Hole in the September, that's the 20th and 21st meeting. You're not getting me to be bullish. Bearish, yes. Now, the market did get under a key support, the 100-day average in the lower band. You see it right there, and that's where I thought the short covering would hit. Are we going to embed in this market? So we cannot count today, but we can count the trading of Monday, day one, where both numbers are under 20. Were they under 20 here, both numbers? Yep. So if today, being Tuesday, you stay like this, you get an embedded reading, which turns, I think, the traders quite aggressive on good rallies to get short again. Same in the 10-year note. I think that good rallies here are going to be short selling opportunities right into the Fed speech. But you've got to get that good bounce, okay? We'll see if the market finds resistance at the 118 and a fraction level, this 18-day average. I'm sorry, that 100-day average. Then we get to the dollar index. Well, you got 2 days in a row over the upper Bollinger Band. I would never tell you to buy over a Bollinger Band. That isn't going to happen. You're overbought. You're getting a bit excessive here. That's my feeling on it. Doesn't mean you can't go higher. You're getting excessive, and you're getting excessive on the downside in the euro. Euro, wow, 99.60. When's the last time we really saw market trading under parity? Closing there and trading there, staying like that. British pound, you realize what they're talking inflation in the UK, 18%? We're going to hear Mr. Bailey talk about that, the head of the Bank of England, and we want to hear what he's saying and what he's going to do to address it. Their problem there is very different than America's. They have the energy pricing. They don't know what to do with. The game changes for all of them if Iran's oil in the U.S. joins into that, and that comes onto the market. That makes up for an awful lot of the Russian oil. It will release things. Is the U.S. going to make that move to help our good allies? At the same time, what do you do with Israel? Because this is just all systems go. It's got to be a disaster for Israel on that type of basis. But we'll see what happens. Maybe they can convince Israel some other way. Well, this is the best thing for you. They're going to shut down their centrifuges and all. Ha! Lower highs, higher lows, sideways action, trying to break out to the downside in Bitcoin. But with the stock market, it's down. Closing under 20,000 could open the door for a much bigger break. So be a bit careful here if that occurs. Then we get to the differential between Brent and WTI. Why is it narrowing in? Oh, let me think. 4 letters. Iran. Aren't they an OPEC member? More OPEC oil? That makes up the difference. By the way, my full subscribers got to see how much oil we took out last month of our strategic reserves. I think we took out 8 million barrels plus. Some of the biggest numbers we've done. I think our reserves are now going to lows we haven't seen in decades. You think that's real smart? I've got my doubt about it. Then we get to Brent crude. Now, look at how you keep hitting this 18-day average. You're trading the Iranian situation, not world demands right now. If nothing happens there, if it's no, we're not going in, well, what do? Where does oil go? If we allow the Iran oil in, what happens? Where does oil go? That's what you're facing right here, and the same identical thing in WTI. This is a rough time. It's an interesting week, interesting as can be. I'm looking for edges. Even if you wanted to buy over that high with the stop under the low, how can you risk that kind of money? It's too big. I think you got to wait and see. Gasoline's acting like a dog. So I don't think the Labor Day is going to save gasoline. I think we're too far into it now. So I'm very much in the bear camp still, looking at 296.50 as serious resistance. But how do I possibly put a stop at 305.55? I can't. Nice to look at, too difficult to trade. Nat gas, still bullish. Now, you realize they did shut off nat gas to Germany. Again, Russia said maintenance got to be done. 3 days, we're going to shut it off. We'll see. They have a way of shutting it off and turning it back on. It's never the same flow that it was for all the technical reasons. I know that Canada is now meeting with Europe about finding a way to send LNG to that. That's very possible. They got to figure out how to do that. They've got plenty of it in Canada. So you put it all together, you get a game plan, and off the game plan, you try to make sense. Is every day a trade day in the markets? It's not. Do sometimes you want to stand out of harm's way, like this big meeting coming up? There are times when I think it's the smart thing to do. If you're a grain trader, you go home on weekends, you're taking your life in your hands, because the weather pattern changed, and now you got the crop tour, so everything's changing on you. Lightning bolt speed, you come in, the market's 20, 30 cents either way. Very difficult. Learn to understand. And that's where my knowledge, I hope, comes in and can help a number of you. Because what I do is I put out twice a day my videos that cover the futures and the ETFs. The first one's 5:30 in the morning, approximately. And it's all futures. Trade ideas long-term and short-term, looking at weekly and daily charts. There are times, like you're hearing me say, I want to be in cash. Let the events of the day, of the week, get by us, especially if they're big ones like you're seeing right now coming at you. And what happens? You go up and down like a yo-yo. Be careful. Then I cover the ETF at 9 o'clock. Why 9? Because between 6 and 9 a.m. Central Time, most of the U.S. government reports come out. In addition, I believe, and I've owned a stock firm, so I know what I'm talking about, let those algorithms get the first half hour of trading. Let them get it done. You'll say, well, Ira, what about in the futures? Why don't you do it there? Because they trade most of them 23 hours a day. And when they trade 23 hours, they don't need the algorithms to come in. They're already there. That's the point that I'm making. How do you get this information? It's so simple. You go to our website. Under the word research, everything is explained for you there. This is the time to get it. I'm going to be all over these markets, special updates. I'll be writing special reports, my monthly report. I'll be hitting probably this weekend, the beginning of next week. So that's going to come out. That's another service that we've got, and I'm certainly going to cover interest rates on that. So with all this, I'm Ira Epstein. You have a great trading day tomorrow, and I'll see you then. Take care.